Good day, ma'am. So we're going to discuss about the monetary policy. So the part one, which is the defining money and its function. So what is money? Money is like a special tool that helps us buy things and trade with others. So it has three important jobs. First is the medium of exchange. So money helps us buy things like toys, games, and snacks. When you give money to the cashier at the store, you are using it as a medium of exchange to get what you want. Second, store of value. So money can be saved and used later when you deposit money in a bank or keep it a big piggy bank, or you are storing its value for future needs, like buying something special or saving for the future. Third is unit of account. Money helps us understand how much things cost. When we see prices or of items in a store shown in a pesos, it makes it easy for us to compare and understand the value of different items. So in our daily lives, we use money to buy things like snacks, clothes, and gadgets. We save money in banks, piggy banks, or even a digital account to use later. Money also helps us understand the value of things when we see prices on shops or make budget for our expenses. So money is essential for trading, saving, and understanding the worth of things we buy.
So in the part two, the role of the Bangko Sentral ng Pilipinas or BSP. So the title of this is the central bank's role, the Bangko Sentral ng Pilipinas BSP. So the overview of the BSP, which is the Bangko Sentral ng Pilipinas or BSP, is the central bank of the Philippines entrusted with crucial roles in the financial system. Its primary functions include maintaining price stability, issuing currency, and regulating financial institutions to ensure a stable and efficient monetary environment. So let's go with the main functions of the BSP. So the first main functions of the BSP is maintaining price stability. So when we say maintaining price stability, the BSP aims to control inflations and ensure stable prices, fostering economic growth and financial stability in the country. So the second is issuing currency. So as the sole issuer of the Philippine currency, the BSP is responsible for producing and circulating banknotes and coins, so ensuring the integrity and ability of the national currency. So the third is regulating financial institution. So when we say regulating financial institution, this is the BSP oversees and supervises bank and the other financial entities to safeguard depositor interests and promote sound banking practices and maintain a resilient financial system. So let's move on to the specific responsibility. So the specific responsibility include the financial inclusion. So the overview. So financial inclusion is a critical aspect of BSP role. So focusing on ensuring that all individuals and businesses have access to essential financial services, regardless of their economic status or location. So the BSP initiatives to promote financial inclusions. So it is the establishment of banking office in underserved areas. So the BSP encourage banks to set up branches or office in rural and remote areas with limited access to financial services. So let's move on to launching financial literacy programs. So the BSP conducts educational campaigns and initiatives to enhance the public awareness and understanding of financial products and services. Let's move on to supporting digital payment systems. So the BSP promotes the adoptions of digital payments solutions to expand financial access, especially for underserved populations who may lack traditional banking access. So let's move on to how the BSP fulfills this responsibility. So, regulatory framework. The BSP implements regulations and guidelines that promote financial inclusions, such as requiring banks to offer basic deposit accounts with low or no maintaining balance requirements. So, collaboration with stakeholders. The BSP partners with government agencies, financial institutions and non-governmental organizations to drive financial inclusion initiatives and expand access to financial services. So that's all.
So, monetary policy it refers to actions and strategies devised by central bank to regulate and control the money supply, credit availability, and interest the rates in economy. It is the key tool used to influence economic activity such as spending, investment, and inflation's level. So, the main objective of monetary policy is to manage the economy effectively by controlling through critical factors, the money supplies and interest rates. So, controlling money supply. Central banks like the Federal Reserve in the US or the Bangko Sentral ng Pilipinas in the Philippines adjust the money supply through measures such as open market operations like buying or selling government securities, setting reserves requirements for banks, and adjusting the discount rate. By expanding or contracting the money to supply, central banks aim to influence economic growth, inflation, and overall financial stability. So, managing interest rates. Central banks also manipulate interest rates, impact borrowing and spending behavior by raising or lowering interest rates. Central banks can stimulate economic activity or cool down an overheated economy. Lowering interest rates make borrowing cheaper, encouraging investment, consumer spending, and economic growth. Conversely, raising rates can curb inflationary pressures and excessive borrowing, aiming to maintain price stability and economic balance. That's all.
Part 4, which is the tools of monetary policy. Explanation of the monetary policy tools. Open market operations involve the buying and selling of government securities by the central bank in the open market. When the central bank buys securities, it injects money into the economy, increasing the money supply. Conversely, selling securities withdraws money from circulation, reducing the money supply. This tool is used to control liquidity in the economy and influence interest rates. The discount rate is the interest rate at which commercial banks can borrow funds directly from the central bank. By adjusting the discount rate, the central bank can encourage or discourage banks from borrowing money. A lower discount rate encourages borrowing and stimulates economic activity, while a higher rate can cool down an overheated economy by discouraging borrowing. Reserve requirements refer to the amount of funds that banks are required to hold in reserve rather than lend out. By changing reserve requirements, the central bank can control the amount of money supply in the economy. Increasing reserve requirements restricts lending and reduces the money supply.
In applying monetary policy tools, the, the monetary policy tools used, number one is open market operation. The central bank can purchase government securities in open market to increase the money supply. This will lower interest rates, making borrowing more attractive and stimulating economic activity. Number two is reserve requirements. The central bank can lower the percentage of deposits that banks are required to hold as reserves. This will free up more funds for lending, increasing the money supply and lowering interest rates. Number three is discount rate. The central bank can lower the discount rate at which it lends to banks. This will make it cheaper for banks to borrow from the central bank, which will in turn lower interest rates for businesses and consumers. For justification, high employment indicates a contractionary economy with low demand and low economic activity. Lowering interest rates will make it cheaper for businesses to borrow and invest, which will create jobs. Increased money supply will also stimulate demand, leading to higher consumptions and investment. Lower reserve requirements will increase the availability of funds for lending, further lowering interest rates and stimulating the economy. Using all three tools together will have a synergistic effect, amplifying the impact of the money supply and interest rate. In addition, the central bank should closely monitor inflation to ensure that the monetary expansion does not lead to excessive price increases. The central bank should be prepared to adjust its policy instance if the economy does not respond as expected. Coordination with fiscal policy may be necessary to maximize the effectiveness of monetary policy.
Part 6 is BSP and the economy. So title is BSP in Action. BSP in Action, Navigating Inflation in the Philippines. Case study. The Philippines, like many countries, face a surge in inflation in 2022, driven by global supply chains disruption, rising energy prices, and the lingering effects of the pandemic. The Bangko Sentral of the Philippines, or the BSP, the country's central bank, reacted to these challenges by employing a series of monetary policy tools. So, muna siya pag 2022, the Bangko Sentral was faced the challenges like pandemic, kanang high, taas ang presyo, o rising effects, mo to siya effects sa pandemic nga nagkataas og presyo ang uban mga kanang organization. Then the BSP response, interest rate hikes. The BSP raised its policy interest rates by total of 175 basis points from May to December 22. This move aimed to curb inflation by making borrowing more expensive, slowing down economic activity, and ultimately reduce demand pull inflation. Pag May to December 2022, hintaas ang total basis is 175. Muna siya ang nakakuan og borrowing more expensive and slowing economic activity. So, for the reserve retirement adjustment, the BSP also adjusts reserve requirements for banks, requiring them to hold a larger portion of their deposits in reserve, further limiting their ability to lend and stimulate the economy. So, ang BSP is nag-reserve of requirements for banks and the larger portion deposit in reserve to further limit the ability. For inflation targeting, the BSP may maintain its commitment to its inflation target to 2 to 4%, using these policy tools to manage inflationary pressures. So, target siya og 2 to 4% sa inflation. For the effectiveness of BSP action, slowing inflation. While inflation remained elevated, it started to moderate and latter half of 2022, suggesting the BSP action were having some impact. So, pag 2022, nagkuan din siya og some impact na maka-evaluate sa inflation. For economic growth concern, the interest rate hikes, while necessary to combat inflation, also slowed down economic growth as businesses and consumer felt in pinch of higher borrowing costs. So, muna siya ang while the necessary is also down the economic growth. So, nagkaubos daw ang economic growth and the business consumer has pitched higher borrowing. So, nagkakuan na o mga, sige na, pahuwam, nga. So, for impact of peso, the BSP action helped stabilize the Philippine peso, which had been under pressure due to the external factors. So, BSP action helped hintabang sa Philippine peso, which kanang nakuan sa mga external factors for that organization or unsa pa diha. And that's all my reporting.
Alternative approaches. Fiscal policy. The government could have implemented fiscal measures such as targeted subsidies for vulnerable households or tax cuts for businesses to elevate the impact of rising prices. Next is supply side interventions. The government could have focused on addressing supply chain bottlenecks, facilitating the import of essential commodities and promoting domestic production to directly tackle the root cause of inflation. Next is price controls. While controversial, the government could have considered price controls on essential goods to temporarily curb inflation, although this could lead to shortages and distortions in the market. Next is the discussion points. First is a balance between inflation control and economic growth. How effectively did the BSP balance the need to control inflation with the need to support economic growth? Next is the effectiveness of interest rate hikes. Were interest rate hike the most effective tool in this situation, or could other measures have been more effective? Next is a role of fiscal policy. How could the government have used fiscal policy to implement the BSP's action? Next are long-term solutions. What long-term measures can be implemented to mitigate the risk of future inflationary pressures in the Philippines? For the conclusion, the BSP's response to the 2022 inflation surge in the Philippines highlighted the crucial role of monetary policy in managing economic stability. While the BSP's action were successfully in slowing inflation, the effectiveness of each approach and the potential of alternative approaches deserves further discussion. This case study provides a valuable opportunity to analyze the complexities of economic management and the challenges faced by central banks in a globalized world.